Welcome, and here we're looking at the US 30, and the little circle here just indicates the 50% retracement level and the 61.8 retracement level at the 15,000 there. The particular wave count that we're tracking down through here is we're looking at it as a corrective wave. However, we'll need to look at it as an impulse wave as well. However, let's just get past this particular point in time, because this move down through here does count as an A wave, little A, little B, and little C for the B wave, and then 5 waves down for the C wave through to this point here. So one way or another, being the 61.8 retracement level and such a large number as well, a medium level 15,000, you would think that it was going to sort of offer some sort of consolidation. We can see here that the market moved quite swiftly through here in this little third wave through here, and we can see that it's slowing down through here, so we're expecting a bounce off here, and of course this will drag other markets around the world in the same support light. So this is it, sort of just breaking down this particular structure through here. I'm not quite sure if this is actually finished just through here yet, and it will get a bit skewed because of the price here being 15,000, attracting large orders. Just looking at it through here on the 5-minute chart, so we can see we've got 1, 2, 3, 4, and it just gets a little bit choppy down in through here, but there's a reasonable chance of that sort of finish there, but we don't have any confirming wave structure for the other side here as such. So we haven't seen like a 1, 2, 3, 4, and 5 excuse me, which would be the first indication of a change in trend. And of course this would be followed by a 3-wave price action, and that's what you'd be looking for to trade long, actually, wouldn't you? So you'd be looking for confirming the 5 waves there, then an A and a B and a C. May not take that form, but something like that. Once you've got that there, then it's just a matter of buying sort of new highs at that stage, but obviously looking for tighter situation in there. So that's sort of that's going. This is the S&P 500. It's also at a medium level as well, even though it's moved through that. I'm not too fussed about that. In fact, when we look at the cash market here, we can, on the S&P 500, the actual 61.8 retracement level is back down at 1620, and the 50 is a little bit higher. And we can also see here too that this particular consolidation here would be the support. So essentially we would be looking, or could be looking at a sort of a move down into that sort of area. We don't think that's the case at this stage, but it could certainly sort of be there. So so just looking for the low right now, actually, that's sort of thing there. This is the daily chart, just on the the CFD, so to speak. So that's the 50 and the 60% retracement level. We do have this as wave 3 up to here, wave 4 to here, and we're looking for wave 5 to move further up there, and this is a little 5 waves for wave 1, wave 2 pulling back, and then wave 3 to the upside. But we also need to be mindful that this could be wave 5 in this area through here, having a short wave 5. Then if that's the case, then we need to look at this in terms of a impulse wave to the downside in all markets, actually. So instead of looking at it as an A and a B and a C, a 3-wave structure, we would need to start looking at it in 5 waves as well, just to be on the safe side, at least sort of understanding the situation. So in that case, just using this 2-hour chart here, we know we've got like a little 5-wave structure in through here if we're looking at a bear market. So we'd also be looking at this here as wave 1, wave 2, wave 3 here, wave 4 can pull back up into here, and wave 5 can pull here. So then we've got this, we've got this 5-wave structure here. We'd also have down to here and back to here. So we would have this here as wave 1 here, wave 2 to there, 5 waves down for wave 3 to here, and then wave 4 if that develops to this point, and then wave 5 developing here. It's important that we understand this this larger impulse wave moving down here, because if we do get this here, then the normal thing is for us to get a counter trend, and the counter trend would be an A and a B and a C. Now it may only go back up to here, or it may go further up here into this sort of supply area up through here, the 50-60% back up through there. But if we got those 5 waves down, then we'll get an A and a B and a C, and then we would get another 5 waves down. Okay, so that's an important point here that we need to work through now that we're down here. We need to keep an eye on both possibilities, and this would also reflect through into the Australian market as well. So one of the things in the Australian market is that, let's move in there first. So what we've been looking for here in the Australian market from this last low here is 5 waves up, and we can have that in place here now, especially if this this little 5 wave structure that we've been moving up through here with, it may not be complete. It may be just the 1, the 2, the 3, the 4 here, and then the 5 up through here. But if it, on the cash market, if it takes this level out here, which is the 580 on the cash market, if that moves through here, then then we've got a, if it moves cleanly through here, then we've got an overlapping wave structure in this section here, so we won't be seeing that 5th wave up through here. But because this has moved down and overlapped this guy here, that means that we're looking at a correction that will accommodate this 5 wave structure up through here. So that means that, whoops, didn't mean to put that there. That means that we need to be looking at a larger structure here. So that 580 is really quite important. So we'd be looking for minimum a 3 wave swing like this. Okay, that would be absolute minimum. Otherwise, we'd be looking for a larger pattern, which would be the 5 waves here, 3 waves back up, and then another 5 coming down through here. So the other point that I want to make too is with the material sector moving up as well. This is the XMJ through here, and you can see that, well, first of all, we're coming up to 10,000 through here, so there's going to be some sort of resistance here, because this is, retesting this particular level through here. It does appear that we've got like an impulse wave here, which is good news. So what I mean by that is we've got like a 5 wave structure moving up through here, nice and strong here, and there may be a bit more here, whatever. But on the negative side, we've got facing resistance. On the negative side, we're looking at a particular structure here that is sort of ending, and when it does end, then well, the good news is that because we've got an impulse wave here, that we should get some sort of counter trend, and then we should see further upside here. So in one way or another, we've got like short-term resistance here and so forth. And the other main driver, of course, is the XXJ, which is the banking sector. And this is also like meeting, well, a couple of things here. First of all, on the daily chart here, it's this area through here is where the sellers are going to be. This is the supply, so that's coming into play now. And of course, this pattern here is the same pattern as the XJO as well. So in this particular move up through here, it's basically a corrective wave so far. I mean, we've got a 5 wave structure into this part here, and I know that because we've spent a fair bit of time on it, and obviously that's sort of if we get that breakdown on the XJO, that 5080, if that gets breached, then we can put this high in here. Now, what we don't know so far is that this move up through here can be an A and a B and a C, so that would be that would be there in a 3-wave structure, an A wave, a B wave, and a C wave in 5 waves there, and that's where it can actually fail. So this is a point where we could start, actually, well, this can occur here, so that's what that is. So that's one way to look at this here as a corrective move back up to this point here. However, the other side of the coin is that if this can also be an unfinished impulse wave, so in 5 waves moving up through here, but as I just mentioned, where we got 5 waves in the 3rd wave here, and then we'd be looking for a 4th wave, which would pull back to the 4th wave of 1 lesser degree, or 38.2% of this move up through here. So they're pretty much both the same, so it's not like a big deal. And then if this is a wave 4, then we get this wave 5 up here, which will be pretty much the same length as wave 1 here, and obviously getting this double top sort of through here. But the positive thing about this is that if we do get this 5 waves here, then we'll get a counter trend here, and then we'll get further upside with this as well. So I guess in essence is that what we're trying to do is, if I can't give something out confident right now, because it would just be a guess. It's just a guessing game. What we need to do is we need to understand this move that's approaching down through here, this whole thing here. So that's once we understand that, then when we get past that, then we'll know if we've got further to come down here, or we're going to be experiencing this pattern here. So it is a place that, that we just have to really just chill out and, trade less and be more diligent about, what trades you do take, and trade shorter time frames and all those sorts of things as well. So anyway, it's just a space that we need to get through before we understand the bigger picture. Okay, so anyway, that 580 on the cash, breaking that is the first point there. On a sort of more detailed level here, it's still not really giving us much either, because I can count this down here as an A wave, a B wave back to here, and then 5 waves down for the ABC here, for the wave C here, or it can bring us down into the 3rd wave here. But as I mentioned, that a breach of that, that not a nice clean breach of this here on the cash market these areas here would tell us that we've got a bigger picture unfolding. So yeah, alrighty, let's have a look at the commodities. Just before we go on to the commodities, this is the VIX indicator through here, and this particular rally that we're seeing here, we're looking at this being a corrective move, and a corrective move because we've got this as an impulse wave to the downside here. So so while this stock market is pulling back down, this VIX will be sort of pushing to the upside. But because this is corrective here, once it's completed, probably from the 15 here or the 1650 here, then this will move down and the share market will move up. So that's just something on the side there that that we can keep an eye on. The gold market here is still in its uptrend here. We are looking at the top of the 3rd wave being here. Didn't find support on top of the group 2 here, so we're looking for an A wave, a B wave, and a C wave through here. So the wave as a wave 4. The wave 4 normally pulls back to the wave 4 of 1 lesser degree. So as long as it stays above the 1350, then the trend is still up through here. The wave 2 was sharp and swift, so this one here is likely to be shallow and sideways through here. So that just needs time to unfold. The copper market is the same as well, bit different wave count, but this is the main thing that we've been looking for up through here as well. We've also been looking for up for 1, back for 2, up for 3, back for 4, and up for 5 here. I thought it may have gone higher, but now we really need to have a look at a corrective move through here. And as I just pointed out, with the materials sector as well approaching 10,000, the Australian one, then we're going to sort of see that. We're also going to see US BHP too. It hasn't retested 65, which is the medium level through here. So that's also likely as well. So there's going to be some softening in the materials sector. So just, it's had a little run. It might be a good idea to sort of play a tighter game, so to speak. The oil market, sorry, this is Brent here, and you can see that Brent is making a new highs here. It's at the at a strong level here, all the ones. So there's also a little 5-wave structure up through here. So we're expecting that to to show us. Well, this is the arrival, the reaction, the first high above the level. So we'll see an A and a B and a C pulling back into this area before we sort of see any sort of upside here. But Brent's doing its own thing. It's moving up where we can look at the Western Texas instrument here. It's sort of been a bit bearish, but from this reaction at 108 here, we can also now see a more defined ABC correction from this point here. This point here may be an impulse wave to the upside. I haven't pulled it apart and had a look at it. My main concern is, while that 106.50 is the support, then everything is, at this level is still intact and can certainly move up from there. But this as a retested resistance would signal a move down to the 105 area from that point there. So, but still, it's still healthy while that's trading above the 106.50 there. The corn market is retesting the 500 through here. As you know, we've been looking for wave 4s. The wave 4 here, first of all, we can see that this move from wave 3 here, we can see this move through here is corrective. You see how this low here overlaps this one here. So we know that that's a corrective rally. And from that corrective rally, we can see that we've got a nice, 1, 2, and then nice strong third wave, which is always the longest. Not always, but in most cases, certainly within stocks, within commodities, you can have the fifth wave, the extension. I guess the third wave is the strongest in most cases because people can recognize certain things. Most indicators will start kicking in and so forth. But in a cycle and a 5-wave structure, to me, is a cycle, and the middle of this is like the middle of the cycle here. So it's and also in terms of the fractal part of it building as well, this is like wave 1, wave 2, and wave 3 here, but also you get wave 1, wave 2, so you get 2 degrees of wave 3, and then you also get another degree, so it's like a third of a third of a third in this case here. So it's in a very, powerful point in the structure, and that's normally where you see wave gaps in the waves, so to speak. And also too, once you see the first wave here, this is normally a sort of a fingerprint of the larger structure here. Anyway, because wave 2 was simple here in the sort of guideline of alternations using Elliott, is that if wave 2 is simple and sharp, well then wave 4 is going to be sideways and complex. And if we take this low from down here, we can count sort of 5 waves up through here that will come into supply here. So we're looking for a move like this here, 5 waves here, a 3-wave counter trend, and then another 5 here as a B, and C here. And this is just in really simple terms as well here. And yeah, look, as I mentioned before, before we got here, before this all started, we were going to get swings. It's going to get complicated and ugly. But the thing with wave 4s is that you just need to allow them to mature to a point where you can see them, rolling over and then take the trade. One of the hard things to do is that if you've made money in the 3rd wave anywhere through here, we tend to become attached to the market, and then we keep sort of, putting on trades in the 4th wave, and what we make here we give back in wave 4. That's the norm with it all. So you have to find another market or wait for this to unfold. Alrighty, let's have a look at FX. I'm just going to start with the US dollar here. There's a couple of possible counts with this, but one of the main points here is that the 81 here, then group 1, subgroup 1, the 1, 2 and 3 here. If we get support on top of 81.30 here, then that will be a signal to sell the euro. If this becomes if the pivot, the 81.20 becomes the retested resistance like this here, then you can take the opposite side as well. So if you're trading the euro, keep an eye on this here, because it will give you a bit of an edge. So with the euro, we've been looking at a couple of wave counts here on our charts. Of course, we've got this as wave 2 here, and this ready to work lower down through here, and that's fine. And if you're shorting here, then you want to put the stop above this little bar here at the 63. 63 would be the best there. So and it's possible that this is down for wave 1 here, the A, the B and the C back for wave 2 here. So 1, 2, and then working lower from this point here. However, if the 133.50 here, the midpoint, becomes the support, then you need to look to the upside there. And as I pointed out yesterday, this particular move down through here is in 5 waves, and we can call that an A wave as well, and then the ABC for the B wave and the C wave here. And this would make this the other way around, wouldn't it? It would make this up for 1 here, and then this would be the ABC here, the A wave, the B wave and the C wave into here. So even if we do get 5 waves down through here, this is slowly getting itself into a corner, okay? So it's getting to the point where we'll know shortly. So if this does move down through here, and it moves down in 5 waves, if it bounces in 3 waves like this here, and then breaks the top of that there as such and moves down here, then you know you've got a bearish picture in tow there. If this move up through here moves up in 5 waves, then you know that you've got part of the ABC correction, which is 1, 2, 3, 4, 5, A, B and C here, and then further up through here. So it's getting itself into a corner here that it needs to come out of, and we'll be able to recognize that. But they'll both move in the same little direction here for the short term. So if that does come down through here, then you know where you're at with it. So really the next shorting trade really would be for the 133 to become the retested resistance. So a move through here, a retesting of that. It's probably do some sort of double retest, and then you need to look for a break lower, so to speak, in that sense there. So in one way or another, it's sort of moving into a corner, and it's got to come out, and that will give you the best trade from that point there. So in the meantime, if that support on the 50 here becomes this is just on the 3-minute chart here, if this becomes the support next time around, then you can go from that point there, because I'm just counting this here. This is obviously down for 1 here, an A and a B and a C for 2 here, and then down for 1, back for 2, down for 3, back for 4, and down for 5 here. So we'll get a bounce off the 133 here. So it'll be interesting to see how it moves up through here, and also the US dollar as well. That US dollar index, pay close attention to where it finds support and resistance there. The Australian market has got a good setup coming into it, so as was the New Zealand dollar as well. Just to start in the bigger picture here again, what we were sort of looking for here is we're looking for wave 4 to complete, and that may have done that. The other count here, of course, is that this wave 5 here is actually already completed at this point to here, but we'll stay with this for the time being here of one more structure to come down through here. So just drilling into this situation here a little bit further. Yesterday we were looking for support on top of wave 2 here, and that just didn't arrive up through here. It was interesting really, because it's a good example of what happened. So we've got the arrival, the reaction, the first high above the level, and then we'd be looking for the A, the B and the C here, and then we'd be looking for support on here as such. And that's where we'd get our timing right. But you can see that it never completed the whole pattern through here. So it just keeps you safe. That's the main thing. So understanding the process through here is it's good. So what we've got here now, if I just bring this back here, is we still need to be mindful, as I just mentioned, that we can have the wave 5 in here, down through here, and the way that would pan out would be that we've got wave 1, wave 2, wave 3, wave A, B and C for 4, and then up for 5 here. So then we'd be looking for an A wave, a B wave and a C wave as such as a wave 2. So this would be 5 waves up for wave 1, back for wave 2, and then would move up from that point. So that's the bullish count. The bearish count is pretty much the same to a point, because first of all, this move down through here, which we'll look at in a moment, is in 5 waves. So we're going to have a 3-wave counter trend, and then we're going to have this move down here anyway. So as much as we can see, we can have this one, and this one. We don't need to worry about that wave E there anymore, so that can go, and that can go. So we could be on our the wave 4 could be finished at this point, and we've got our first wave down, which would be wave 1, back for wave 2, and then we can look to short here. So this move back up here will be in 3 waves. So let's have a closer look in at this here. So currently we've got, from this high down through here, we've got the 1, the 2, the 3, the 4 and the 5. So what we're looking for here after 5 waves, we'll be looking for the counter trend, which will be in 3 waves. The A, the B and the C, and once that's completed, you'll see 5 waves like this, and then there'll be a little bounce back up off here, and then there'll be further downside, so to speak, in this, like this here. But this length here should be at least the same length over here to start with. So look, a good setup coming in here. How far will this ABC come back? And what pattern will it take? Well, the A wave here should be in 5 waves, the B wave will be in 3, and the C wave will be in 5. So it will be a 5, 3, 5 structure. The 2 levels of resistance, it would be this little bunch in here. I'll just see if I've got a smaller chart here. Where are we? Okay, you can see the 5 waves a little bit clearer now as such. So we can see that on the 20-minute chart here, we've got the 1, the 2, the 3, the 4 and the 5 through to here. So obviously this little area in here at the midpoint here is supply 1, and this is supply 2, basically. That's the reality of it all. So we can get an A and a B and a C to here, and then fail from there, and then just move straight down from that point. Or we can get a higher move coming in, back up into this level here. I doubt it, but it's certainly sort of possible, but I'd certainly be looking towards this little midpoint here. So what we can do from this point is use the levels. So if it moves up through to here and then comes back in and gets stuck, especially on this one here, the pivot here, the 91.20, if it gets stuck under that, then you know that it's doomed and it will work. It'll take a while, but it will work lower from that point there. So look for some type of three-wave structure within here. It should be quite simple. It just may not pull back the 50, 60%, so to speak, coming through here. So that's the 38.2% here at the first supply. Just keep a bit of an eye on that. The New Zealand dollar will be the same as well. So it can move down as well. Alrighty, well that's it. So good morning and thanks for listening.